So right now we are in during lunchtime. We have about 30 minutes to go to do this really fast class about order blocks. So people have been asking me how do I determine order blocks? What is an order block? So basically, what it is, an order block is in a zone where buying and selling occurs. All right. So an example of order blocks. Let me just erase that. Let me just take that one off to make it clear. So this is the chart of the SPX 500 or SPY. I use SPX. Let me just show you real quick. I use SPX 500 USD. That's the ticker that I use by Yolanda. The reason I use this ticker is because it trades 23 hours. And like SPY, if I put SPY, you will have some gaps, gap up, some gaps in the morning that I usually don't like. So it skips. So the reason I use the other chart is because it gives you more accurate values as to where was the pre-market lows and highs during the Asian hours and during the London session. All right. So let me go back. So I'm gonna go first. Every morning before market opens, I usually start looking at what's the pattern. As you can see, this chart was since yesterday from Tuesday. So we were coming down. We were in a bearish trend. This morning, all right. So there was around midnight my time, which is around 2 Eastern time in the morning. Uh, the trend was down. We were making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And at this point, just an example, this is a 30-minute chart. At this point over here, on this candle here, we created what it's called a change of character. All right. A change of character means that we broke the trend. That means since we're coming down and this candle closed above the swing high, that means we broke the trend, we changed character, and that's a potential sign of reversal towards the other side. So in this case, we change of character. That's why I call it charge. So once we have a change of character or a break of structure, that means order blocks are created, in my opinion. So for example, an order block, like I said, can be a zone of candles where buying and selling occurs. On this 30-minute chart, for example, this set of candles, these three set of red candles here are what's considered an order block. So an order block, basically what it is if the trend's going up, an order block is the last set of candles on the opposite side. So in this, since we broke structure here towards the upside, the last set of candles on the order block to form an order block will be this candle, and this candle. That's why I drew the order block there. However, I like to be more specific. So I like to take the last candle on the opposite trend as an order block. So I redefine my order block, and this will be a 30-minute order block right at this last candle down. All right, so I'll put it as a 30-minute order block. Since we broke trend and we're going up, so this is a 30-minute bullish order block. All right. So now we have a 30-minute bullish order block. So as the market continued to push down during the midnight hours, during the London session, so you can see coming back up. So let me just expand this one real quick. As you can see over here, we had this candle here going high, and then this following candle, it was lower. As you can see over here, let me just draw a line there. All right. So this candle over here, let me just expand it. Even though it was a green candle, but it was, imagine we don't have any colors on the candles. They're all just, plain white or all green or all red, whatever it is. This candle over here, even though it was a red candle, it was higher than this candle here, right? This candle here, even though it was green, it was a green candle, but it was lower than this high. So, and lower than this low. So technically, even though the candles, this was a green candle, the zone, the level where it is, it's lower than this one and lower than this one. So technically, this is an order block there. All right. So once we pushed up, then I shift my order blocks because it created a new, this point over here with this candle here. I'm gonna show you real quick. Let me just use the thing. So we had this high, we had a lower high. All right. So from here to this kind of green candle, it created what it's called a break of structure. Now remember what I say, order blocks are established when there's a change of structure or a break of structure. Change of character or a break of structure. So from this point to this point, once this candle closed above this level, it created a break of structure. Since it created a break of structure, we established there was a new order block there. All right. Same goes over here. Break of structure happened here. All right, as you can see. So we had this high, and then we came back down, and then this candle made a new higher high. So now we shift the order block to this one over here. And that's just a 30-minute order block. We're just talking about order blocks. All right. Price continued to push up. So this morning we opened with this 30-minute candle here. All right. So we made this one, and then we another break of structure here, and this one over here, and this order block was created just around there. All right, and that is a 30-minute order block, again bullish. Now, what happened when we opened the first 30 minutes? This candle closed below this order block. So since we had this high and we had this low, and this candle closed below this low. Now this created a change of character. All right. Create a change of character. All right. So now this order block here, since we broke it, now we shift this order block. I like to, on the 30 minutes, I like usually to put it on wicks. You can put it on the whole candle if you want. But now this became a bearish order block. And now I'm going to leave this order block there because to show you what happened next. All right. So I usually like to wait the first 30 minutes. We had some news, of course, at manufacturing that gave us all this red candle down. All right. And then we started pushing. All right. Remember, before this time, let me go back to the 5 minutes. So now we have determined we have a bearish order block. All right. So now I go back to the 5 minutes. I usually like to establish my zones, like I say before pre-market. I usually like to establish a 30-minute order block on a higher time frame. Now I go to lower time frames. I like to use the 5-minute time frame. So over here, this candle was our opening candle. All right. If you follow the trend, right now, remember this order block was established after manufacturing. So it was established on this candle here. All right. So if I go to the 5 minute, I like to watch these order blocks. I usually trade off the 5 minute order blocks, but once the higher time frame order block hits, then I'll set my stop losses or profit levels to take. So pre-market we were coming up, so higher high, higher low, higher high, higher low, higher high, higher low, higher high. All right. And I was looking at the market, so we opened here. This was the opening candle, which is this candle here, all right? Now, if I draw an order block on the 5 minute, all right. So on the 5 minute, we had a trend up. So we had this was a break of structure there, all right? That means we established a 5 minute order block here. All right. and that is a bullish order block. All right, so that's a bullish order block. So what happened? So price made that made a break of structure, came back to this order block. All right, attempting to push up, but remember this was pre-market. So this candle here had a close below our swing low, so that was a change of character. All right, and that was just a few minutes before the market opened. So right now, since it had a break of structure, so the last candle up on that swing was this candle here. All right, and that one became a 5-minute order block, but became bearish. All right, and now since that one got broken, I'm just gonna take it away. So that became a 5-minute bearish order block. All right, so 15 minutes before the market opened, we determined the trend was changed. Now we were bearish. All right, because of this candle. So when the market opened, you can see we had a big candle there. All right, the next candle we reached that bearish order block. All right, remember this 30-minute order block is not there right now. That was established later on, but I'll bring it right back. So we came back to this price over here. Price climbed to this bearish order block, and as you can see, that was the perfect entry to take puts. I usually like to wait 30 minutes to see what happens though, but if there wasn't any data, I would have taken puts here. My risk will be, if you look at over here, so let's see, I bring over, not that one though. That's the Fibonacci levels. So my short position. So my stop loss would be at this high. So if, let's say I take the trade here when this candle closed, and I put my stop loss just a little bit above, you know, the order block, assuming that the candle will close just a little bit above. And I would target the swing low, which is this low that was created there. So my risk to reward on this trade would have been 5.86. So I would have taken that trade because my risk was very minimal, because my stop loss was just above this order block, but my reward would have been all the way to this swing low. So I would have taken that trade there. Now, assuming there was no data coming out, you know, etc., etc. I don't trade the first 30 minutes, but that's an example of why I would have taken the trade. Okay, my risk was very low. Even if the candle continued to pushing up, my stop loss would have been very minimal. My loss would have been very minimal, but my gains, my possible gains, if this hit, would have been great. It would have been, you know, close to 6, you know, risk to reward. If I risk, you know, my stop loss is, let's say, $10 from this point to this point, my reward would have been around 60 if I held through. All right, so that's how I like to trade. Now, continuing on, so we had this 30-minute, so we had this 5-minute candle, right? We determined that we were already pushing, we came back down, did this over here. This was manufacturing data, so we printed this big red candle. We put it back on those puts there. We made a new lower low, so we came over here. As you can see, we broke structure. Now that we broke structure, so this order block, I'll move it over here to the last candle up, which is that one there, to this one, which is this candle over here, and that continues to be my bearish order block. Same goes over here. We continue to push down. All right. We saw this over here. There was another break of structure there because we had this low and then we pushed higher and then we broke it again. So now that became another order block there. All right. All right. So I was busy this morning, right? And I was posting all this, as you can see in the trading chat, I posted all these, you know, screenshots of what I was looking. And once I saw this big green candle, Champ, as you can see, Champ took calls around here, all right? He took calls around here, and it came back down. Now, The reason I was telling you about the 30-minute order block is because once we had this candle here, I'm gonna come back to the 30-minute. Remember, this candle closed over here. So when we had this higher high, higher low, higher high, this candle over here in the 30 minutes created a change of structure in the 30-minute. So there was an order block here. All right, that was a 30-minute order block. Just keep that in mind. 30-minute order block. All right. So if you look at the 5-minute chart, so when, for example, Champ took those calls, he took them around right here. He took him exactly at the bearish, 30-minute bearish order block, and then we came back down. But at the same time, the reason Champ took those calls is because this point over here, this candle there, created a change of structure. So you can see we have a lower high, lower low, and then this candle broke this swing high there. So once it broke that swing high, it created a bullish order block here. All right, and that's the bullish order block that I started posting. That's the bullish order block that I posted on a trading chat, and I told you I want to take calls, wait for calls for price to come back to the order block and take those calls there with a stop loss at 42.23, which is this point over here. Let me just change the coordinates there. All right. So I told you when we had this big candle and it was around right here, I told you all guys, okay, get calls at this order block. Your stop loss will be around 42.23, which is this swing low over here. So as you can see over here, a lot of people were, some people were questioning, why do you want to take calls at this point? There's no reason to take calls. Because once I saw this candle and price came to this order block, my risk to reward for, for longs, even if I took the calls when they closed over here, and I have my stop loss, let's say a little bit beneath there, and I was gonna target this swing high, as you can see, my risk to reward is 3.5. So if I would have risked 100, $20 stop loss, my reward would be around 70 that I was looking for. So it would have very minimal risk, but huge upside potential. All right. So that's why I said, okay, calls of this order block. I like order blocks. Once I started seeing this green candle here, I said, I like calls. Even though I had said before that wait for calls once price reached this target. All right. So now I said calls. We have some indecision there. Price was trying to, we had this indecision here. Price tries to, even though it was a green candle, but it had this huge wick down. Then we had some indecision there. Now this candle looked better, almost a hammer candle, and then we started pushing up. All right. So now, since we started pushing up, so once we broke this level here, all right, we create a breakout structure. That means if now we have a breakout structure, that means there has to be an order block. So the order block, the last candle down on that one, would have been here now. All right, so that's a bullish order block. We made this high, came back down a little bit. We consolidated a little bit over here, and I'll erase this. I won't erase that one. Let me just. I moved it. Before I go to this order block here, so you see the price went to this bearish order block. This is where Champ took calls, but this 30-minute order block has every order block on a higher time frame has more weight than a lower time frame. So when he took calls, we were exactly at a 30-minute bearish order block, and we rejected the order block, right? But we were still bullish in the 5 minutes. So price came to this 5-minute bullish order block and then pushed up. Now, price was fighting here. You can see 5 minutes, 10, 15, 20, 20. For about 30 minutes, it was fighting until it finally broke this level here and got out of the 30-minute bearish order block. So on the 5-minute level, let me just erase this one because I already mentioned about this, what happened when we got the rejection there. So on the 5-minute, you can see this you can see this candle. All right, we came back down, consolidated this candle, changed it, took another break of structure. So now you can redraw your order block to this candle here, which is the last one. All right, and now we have another order block. So your price comes back up and come back down to over here. You would enter calls, and your stop loss will be beneath over here. Now, let me show you something real quick. Let me just expand. So this candle had a high of 42.55.4, and this one 40. Oh, exactly the same high. So I thought it was kind of lower, but so I would have taken calls here. Now this has another breakable structure there. All right, this is right now very close to lunch. Exactly, this is the lunch candle that you started. So you can see it had a breakable structure here. An order block was established there. All right. So we had this breakable structure, right? Price right now, as we speak live, price just came back to this order block, which also has supported 42.55. 42.55 is a historical support and resistance level. So we broke that level right now, came back down to the order block, broke it again. We established another order block here, from here to here. That means we have a bullish order block, new bullish order block. Price just came back to this order block down, and right now this is live. So right now this would be a good entry at 42.55 to get some calls. So at this moment, if you're taking fall calls at 42.55, right now the price is 42 almost 60. So this is like 40-50 cent candle. If you'd have played 0 DTEs here, you would have banked. You would have made some decent money there. Even 1 or 2 days, maybe 1 or 2 days will be like around 10% on this candle. 0 DTEs maybe 40-50%. It depends what you took. But that is exactly how order blocks work and how I determine order blocks. There's more theories about it, what makes an order block stronger, and that also has to do, for example, with fair value gaps. So a fair value gap, I'll do some really fast of what a fair value gap. So a fair value gap is, so remember, we determined this was an order block earlier, right? When we changed character there, it came back down and then pushed up. But at the same time, when we had this big candle, so this imbalance, all right, so that's an imbalance or a fair value gap, is the zone from this candle here to this candle, from this first candle to a third candle there. So the difference between this wick and this wick, it's a fair value gap. So a fair value gap is established around 3 candles, basically. So that means there was some orders that were left behind there since we had a big move, and price needs to come back down to the fair value gap. So as you can see, price came over here, came back down, filled the fair value gap, or it closed it, came to this order block, and then pushed up. So when there's an order block and a fair value gap to it, the order block becomes stronger. It is more valid. All right. As you can see over here, when we came back down, all right, we created a fair value gap there. So we were waiting. Once it hit over here, if you play a fair value gaps, you're expecting for this price, for this fair value gap to get taken down or get closed on. So you're expecting the price to move up, right? You have this order block, also this fair value gap. You're expecting price to close the fair value gap since you already have a support zone here. So that's even better, to take those calls because you want the fair value gap to get closed. Same goes over here, right? We have a fair value gap in here and here, as you can see. So when we had this push, we had this fair value gap from this candle to this candle there. All right, look where it bounced from exactly. But at the same time, we determined before there was an order block there. All right, we determined that there was a 5-minute order block there because we had this swing high, came back lower. We had all these candles coming back down. So price went into the order block on these candles here. But at the same time, it went to the fair value gap. So this zone is even stronger as support because it has a order block and the fair value gap that needs to be filled. And then we pushed up again. So that's how you can use also, order blocks and fair value gaps to strengthen your order blocks. So hopefully you understood how order blocks work. Right now, this is live. So price make a break of structure here. Price came back down to this order block, and now we're pushing up. So I usually take 10% profits, and then I target the next swing high. So right now, if you took calls here at the 42.55 level, your target will be here. Will be the swing high, which is 42.62.6. So you're hoping for price to hit the target to sell more cons and probably leave runners after that. But that's how order blocks work. That's how I determined support and resistance values. For like I said earlier, we had this 30-minute bearish order block that was established here. All right. So you could say that was a 30-minute order block there that we just talked about earlier. So when the price came over here, then you got calls all the way over here. Your target could have been that 30-minute order block because that was a zone of resistance. So you wanted to sell your cons or probably leave some runners to see if it broke it. But that was a good zone to exit that position and profit around. What determined it was around, let's say, a 3.5 or 4 risk to reward ratio. So that's how you determine how to get out also. So order blocks work as support and resistance, or as targets, or where to get out, where to get in. Hopefully this little class helps out though. We still have about 7 more minutes for lunch to end, but I wanted to do this class during lunch because I usually don't trade during lunch, but I can show you exactly what happened during that market. Why did I alert it? I couldn't alert it, but I posted that TA because I was driving, but why I wanted to take calls at this level here. And yeah, why Champ took the call. Champ took the break. That's a valid play. He took the break, came all the way down, but his play was still valid until this level here. So he even mentioned it on SPY that the support was all the way over here, and I did not play that. I told you to just wait for price to hit over here to take the calls, better risk to reward, and you would have banked some decent dough today. Other than that, yeah, just pitching. This is being recorded. I'll try to post it later on. So for those who missed it, I'll figure out where to post it. And I'll give you the link. But in the meantime, we have around 5 minutes. I'm gonna get something to eat and drink before we start trading for the PM session. But that's how we do it, though. That's very simple. A very simple strategy to trade. You don't need any indicators at all. Just playing support in the resistance levels based off order blocks. Your stop losses, like I said, this trading method keeps your stop losses, your losses to a minimum, because you're expecting price to come back to this order block. For example, what I mentioned before, your stop loss would have been minimal compared to the potential gains. So once you have the gains, your gains are gonna outweigh your small losses. That's how we've been trading since last week, or since 2 weeks since I joined VIP again though, and we had some nice decent gains. All right, guys. So hopefully you learned something from order blocks. In the meantime, I'm gonna get ready for the PM session. Right now it's chop, as you can see though. But for example, just a quick reminder. Right now we have this order block here. So potentially, if price goes below this order block, if this 5-minute candle closes below this order block, then puts are in play, and probably would target 42.35, which is the next historical support and resistance level. All right, so just keep an eye on that one though. Let's see what happens in the next few minutes once lunch ends and value starts kicking in. If not, if we continue to push up, expect maybe 42.80. I don't know if it's today, maybe during the week. But if we break down, then we're probably gonna keep 42.35 next. So appreciate you guys logging in over here, and peace out. I'll see you in a few minutes. So.